Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at why you can largely ignore the sensationalist news around China and Evergrande. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian Stock Market Show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Because this is the show where you get to ask the stock market education and trading experts to look at your favourite stocks and answer all of your questions. Well, right now, everything we hear is either about COVID or China and how this will not only affect our stock market, but the economy. Now, despite the current situation with COVID still being very fluid, there is light at the end of the tunnel and the Australian economy is coping. The good news is that the government knows, based on what unfolded in 2020, that it can restart the economy pretty quickly if it needs to. Now, the challenge with this, however, is China and how they respond to the current tensions between our two countries. There are also concerns around China's economy and the potential collapse of one of its largest property developers, Evergrande. Now, speculators are suggesting that if Evergrande fails, this could result in the Australian stock market crashing, which I strongly disagree with. We know that China is growing, given that its GDP growth in the third quarter of this year is 7.9%, which is on the back of record growth of 18.3% in the second quarter. In fact, if we look at the last 12 quarters since 2018, 11 were positive. Now, if we exclude the record second quarter growth this year, the average growth in the remaining 10 positive quarters is 5.97%, which is above both Australia and the USA over the same time. Australia's GDP growth in the second quarter of this year rose by just 0.7% and 9.6% for the year, whilst the US achieved GDP growth of 6.6% in the second quarter of 2021. Given the current economic climate, the probability of the market crashing is low. Therefore, I recommend those who have a longer term view continue to hold rather than sell. If you're more of a short-term investor, you may have already sold, or you are looking to exit with the view to re-entering once the market settles. Now let's talk about the markets, and as usual we'll start with what were the best and worst performing sectors last week. Now the best performing sectors, they included energy, which is up 4.9%, followed by utilities up 3.82% and communication services up 1.22%. The worst performing sectors included materials, and that was down 2.65%, followed by industrials down 1.37% and financials down 1.35%. The best performers in the ASX S&P Top 100 stocks, well, they included AusNet Services up 28.79% after a takeover bid from Canada's Brookfield, followed by AGL, that was up 8.15%, and REA Group, that was up 7.70%. The worst performing stocks included Lynas Rare Earths down 8.22%, followed by Reece down 7.76%, and Reliance Worldwide, that was down 5.98%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, wasn't last week an interesting week on the Australian stock market? We did have some fairly heavy falls earlier on in the week, and I think at one stage we're down around about 5% on our marketplace before coming back a bit on that Thursday there, closing up. And Friday was a little bit weak, but we'll get into that on the charts. But it was an interesting week. I know a lot of people were worried about our market, and I still do think it's going to go down, but let's go and see what the charts actually say. Now on your screen is normal, we've got a weekly chart on the right and a monthly chart on the left. Same charts that I showed you last week, and I'm going to bring up that monthly chart so you can see there. And you can see here how last week, or this current month, we've had a low there of 7,474 points. And if we go and look at, find out how much it's fallen, you can see there at one stage we were down 5.42% this month so far, and that was last week. We went down to that much. Now, as I said to you, or have said a few times, I was thinking our market would fall somewhere between 8 and 12% in this pullback. And currently, whilst we're not down 5.42% at this point in time, it's actually about 3% from that high. And that high was in August. But I do think our market is going to fall away. Now, let's go to the weekly chart and have a bit of a look at that. And you can see how we crossed the trend line. We've crossed below a trend line through here. We've had a move, very, very strong move down. And if we go and look at last week, from the close the week before, we can look there and we can see the market was down just under 3% there for the week before, coming back to closed down just 0.7%, a very, very minor close there. But I still think whilst we are in the time for the low, and last week, you remember I drew this box, or I put this box here, which I thought the market would have its low somewhere. Let me put my lock off so I can put it there. Somewhere between roughly around where we are right now and roughly through to around about November. So we are pretty much moving right into the time frame for my low. We just haven't hit the price yet, and my price is somewhere between this sort of 7,200, 7,300 all the way down to about 6,914. You can see there from that high, we're talking about 12% fall. Now we've had 1, 2, 3, 4, 5, 6 weeks since that all-time high, which was on that bar there of the week ending the 13th of August. And I still think we've got more to go. I think if we do get a move up this week, it'll be short term. It'll be 1 week up and then it'll move down. That was a beautiful, strong sign that it moved right down, and then the buyers came back in to bring the close right up through to here. And we'll see. I'll go down to the daily chart and I'll show you that. You can see here's earlier on in the week. So there's your Monday, it really fell away. Tuesday, we continued to fall away before we reversed. This could be a bit of a sucker's rally, these few days up, and it often catches people, retail investors a little bit unawares, because they'll start buying in thinking the market is now moving up, and all that's happened is through here we may have just seen the big end of town just pulling back from selling away to let price drift up before they come back in and sell again. And you can see here Friday it was a 47-point range. The market opened at 7,681 to close and closed at 7,642. So in this, if we do see a downward move earlier on in the week, we could see a nice big strong down move. I will know exactly when that 7,474 points mark is broken. If that one is broken, then we're definitely moving down over the next couple of weeks into here. But for me to change my mind, we could even have 1 week up like we saw through here. We have that green bar there. We could get 1 week up and then turn again and come down into mid to late October. But again, nothing too much to worry about. As I said a little bit earlier, if you're short term, we're talking about that's anywhere between 5% fall from a current level down to about a 9% fall from its current level. So if you're a short-term person, you may have already exited the market. You may have had stocks that you own that have told you to sell already. I don't know, there's a few stocks that I own that are pretty close to me exiting for my own portfolio. But to me, it's just looking at that if you are short term, and I'm talking short term is anywhere between one week to 3 months is short term. You may find stocks that you hold that you might need to exit, or you have already exited there. But I'm also seeing a lot of stocks that are setting themselves up for being good buying opportunities, which I'll be looking for probably at the end of October into November. I'll be looking for good buying opportunities. If you're somebody who's long term, and that means I'm talking about 18 months plus, 2 years, 3 years, 5 years, whatever that term is for you, but more than 18 months, then you're probably going to look at this situation and go, it's a bit concerning, but don't worry about it. And you don't really need to worry about China and what's going on with this Evergrande thing, I think. And a lot of people get nervous about this because it's all across, we're seeing a lot of stuff on the media and YouTube. If you're watching YouTube videos and people talking about China and what's going on with Evergrande, they're wanting you to watch those videos so they can make more money out of advertising. And it really, what's been going on with Evergrande has been going on for months and months and months and months, and it just does not crash in one day. That's pretty much it. The big end of town in Australia, and obviously the people in the know in China would have known what the situation was with Evergrande and would have known for months and months. We've seen iron ore come down over this year. We're seeing iron ore at really strong lows. We've seen BHP, Rio and Fortescue already fallen heavily there. So can our market crash? No, it can't. Is our market going to crash? No, it's not. Is it what's going on with China with Evergrande going to affect all of our big banks? No, it's not. Our big banks have still got plenty of upside to go over the long term. BHP, Rio and Fortescue, are not buys at this point in time, but they'll come back, and I'm actually getting excited about those stocks. So once the iron ore price stops falling, and these stocks will also stop falling, and then we've got some good opportunities to probably get into some brilliant stocks at cheaper prices. So now's not the time to panic. Just understand that the market is going down into a short-term low, and then we'll be bullish into 2022. So that's my take at the market at the moment. Now it's time to get into your questions for today. All right, the first question that we have today is from Evan James, and he says, if anyone is wondering why the Santos chart only went to 2006, Dale is using the wrong chart. Now, hopefully he can try answering the question about Santos again with the proper chart. The original question came from James, who asked, now it has settled a bit, is it a good time to jump in onto Santos? Now, I'll answer the question about what actually did happen. I was actually using the right code, but the wrong data. Now, I'm going to show you on your screen what actually did happen. Now, you can see this is, on your screen, this is the current data of Santos, but when I go into looking at stocks, you can see there on the left-hand side, I've got a lot of different data files through here. These all ones are different data files for all sorts of different things, you know. And this is the one here. It says WWASX sample. So we do have that one, and I've got other different data exchanges through there, but you can see here these are all Australian stocks. Now these all only go to 2006 because one of our courses we had this data file here therefore, and to keep things consistent with them, what we actually did do, because of stock splits and all sorts of things happening, we actually locked the data file for all the exercises in the course. That's really what we did. That way we knew the data that we had was consistent with the data our students would have when we're answering questions on the applications of techniques. Now that data file is still sitting there, and Santos is in part of that. So when I typed in STO as the code quickly before I set up to do my question last week, or I answered the question last week, it brought up two different versions of SDO. One is the one that you're going to see in a second, and the other one was the one from that data file, which was, as you can see, is 2006, is way out of date. I just didn't pick it up, and in my, as I said, I just typed the code in and clicked on it, and actually clicked on the wrong one by mistake, and I am sorry about that, but I'm going to go and look at Santos right now, so now I know exactly what happened. We now have, I suppose, just a little bit further on from a student point of view, we now have a completely different exchange, which has completely different names that you won't know, because where you live and what you trade is completely irrelevant. I know a lot of people say to me, can you teach me to trade the US market, or can you teach me to trade the Asian markets, or can you teach me how to trade European markets, or whatever it is. It's trading. That's what it is. So trading is like driving a car. Once you know how to drive a car, you can go anywhere in the world and drive it. I know somebody asked me about trading Bitcoin. Can you teach me how to trade Bitcoin? I go, it's just trading. As long as you've got charts, it's trading. So having all the knowledge and skills to trade Bitcoin or futures or options or stocks or whatever it is anywhere in the world over any time frame is possible. You just need to know how to drive the car and have that data and have the rules and techniques. So the stuff I teach in our diploma course, I can trade intraday with that, daily, weekly, monthly, yearly, decades with all that information. I could trade FX with that. I could trade options with that. I can trade cryptocurrencies with that. I can trade blue chip stocks, and I could trade mid-cap stocks and speculative stocks with all of that data. Because it's how I drive the car, or how I trade, and it's all the knowledge and the skills and the tools and techniques. Too many people put them into a little box and go, this works here, and they take things out of context. So, but you do really need to understand how to trade, and if you don't understand how to trade or drive the car, then what car you drive is your personal choice. So you might want to drive, a Lamborghini, or you might want to drive a Volkswagen. It's up to you. Same with trading. You might want to trade FX, or you might want to trade stocks or blue chip stocks. Up to you. But the techniques and everything else and the analysis is the same. So let's now go and have a look at the chart, or the real chart of Santos. I'll just get that thing off the screen so you don't need to see that anymore. I'll just take that down. And you can see here at Santos there on the monthly on the left and the weekly on the right. Now you can see the all-time high of Santos is back in January 2020, and obviously the big COVID push right down into that low of $2.73. More recently, obviously, we've got the Santos and Oil Search merger that we're seeing through here, and we've had that move down from a June 2021 high down through into here. This is just pretty normal. Look at that, just bang. bang. I like Santos at the moment. I think it's a good stock. I think it's worth looking at in your portfolio. There's going to be a little bit of adjustment at the moment, obviously because of the corporate action and everything going on, but I think Santos is a good looking stock. Long term, I do like it. Santos as a stock. This is probably a little bit interesting there, that outside bar that we're seeing through here. Very, very strong move. I do like it. I think, once it gets past that sort of 720, I think it's got every hope of moving right back up here. So if you do own Santos at the moment and you are in it, I would be hanging on to it really, really well, because all it's doing is looking like it's doing exactly what it should be doing. And I do like this stock. If you're not in Santos, it may be a tiny little bit early to get into it, but I think it is looking a little bit better. Given our market at the moment is going to be a little bit weak over the next few weeks, I'll just be a little bit careful and look for a bit of strength. But there's a lot of resistance all around that 730, 740 sort of mark there, and I'd just be careful about that. That's why it's probably, to me, it's always better to get in after you get through some of those resistance levels and that, because sometimes you'll see people jump in on those thinking it's going to break through, and then it doesn't, and then it ends up falling away, and then they get caught on that. So just be careful with that at the moment. But I do like Santos as a stock. Right now it is looking better, and I think it's a good medium to longer term buy. That's what I like about it. Now the next question that we have is from The Real Death Stare. I'm not sure I want to have you give me that one, but anyway, it's from The Real Death Stare, who says, hi Dar, with Bank of Queensland acquiring ME Bank recently, would you consider Bank of Queensland as a buy at its current price? So let's go and have a look at Bank of Queensland. Again, I'll put my glasses back on so I can see what's going on. So this is Bank of Queensland. Looking good, isn't it? I mean, I do like the banking sector. Now, this is a second tier banks, and they're not quite as profitable as obviously the big four banks, but they're doing okay. Now, right now, you can see here that its all-time highs way back in 2007. Now, a lot of these second-tier types of banks, their funding costs are a lot higher than the big four banks, because they're have different ratings. You've got AAA, triple B plus. There's all different ratings, and that will determine how much they pay for their funding. But right now, I do like this stock. It does look like it really has turned the corner, and it does have a little bit of resistance sort of around that $12 mark. But I do like it at the moment, and I wouldn't dissuade you from getting into this stock if you've done your research on it and you like it. Because it's got bought ME Bank, it's going to make it bigger and a lot more stable, which obviously I'm liking the banking sector at the moment. I think the banking sector has been really, really hard hit over the last 5, 6, 7 years, obviously with the GFC. Then we've had all the Royal Commission, all the inquiries into the banking sector. We've had all of the legal action against, all the fines, myriad of stuff that happened in the banking sector. But eventually, the proverbial finish is hitting the fan, and we get to a base level, and then we go off from there. And I think the next few years, our financial sector will be a good sector to be into. I do like a lot of the big four banks. I think at the moment, NAB, ANZ and Westpac are probably better opportunities than your CommBank at the moment, because CommBank's moved through a new all-time high. The others haven't. I mean, obviously Macquarie's been going really, really well for quite some time as well, and that's always a good choice, Macquarie Bank. But I do like some of these second-tier banks as well, because I think they'll get pulled up with what is happening, and there's a lot of changes happening in that financial sector, with the buy now pay later space as well. The banks, they probably want to get in on this, and so I think we're going to see a bit more of a shuffling of the deck chairs, if that makes sense. A lot more corporate actions going on. Some of it will be in this financial sector, some of it will be in other sectors like your energy sector, like we've seen with Santos and Oil Search. But thank you for giving us that question. The next one we do have is from Courtney's asked, hi Dale, love your channel. Hope you could make time to look over SUL. I bought in August 2020 after reporting season as a short-term purchase and have a trailing stop loss of 15%. Could you give me some technical feedback on what you think it's doing at the moment? My finger is hovering on the sell button lately. To me, 12 months of holding it, it's not short-term. As I said a little bit earlier, to me, short-term is anything up to 3 months. 3 months to 18 months is more medium-term to me, so you're probably a medium-term trade there. Long-term, over 18 months. That's for me, and not for everybody. Some people have different criteria around what they believe is short-term. Some people think under 3 years is short-term. Some people think over 3 weeks is long-term, and it's not to me. Short-term is up to 3 months. That's really what it is. But let's go and have a look at the stock. You're talking about SUL, so let's bring that up on the screen. Look, I do like this stock. He bought she bought it back in August 2020, so over somewhere around about here. You're not really making too much money on it at the moment. You probably would have bought it somewhere through into those few weeks there. So you're doing okay. At this point in time, there's a whole lot of reasons. It's getting some resistance through there. There's a high of 1365. There's a high there of 1372. There's another high of 1373. And this one here is a high of 1362. Now that one was a high of 1365. So a lot of resistance through there, and it has dropped away. I think if we see this move through that sort of low there, 1174, technically, I think it's got more to fall away than rise at this point in time. I think that what this is saying to me, it's tipping over, it's slowing right down, and I think you're probably better off to look at your portfolio and go, do I want to continue holding it? Again, because your idea was short term, if you said to me it's long term, I'd probably have a different opinion on this stock. But short term, what does that actually mean to you? Is short term 3 weeks, 3 months, whatever it is? Right now, I think it's looking a little bit weak, but if it does start to fall below those lows, then I would be questioning whether I would continue to hold that stock. So please have a good look at it yourself. Make sure you know what you're doing and have some rules around it. But I think you've done really well. You've had a stop loss on that. You've been watching it. You're making money at the moment. I think that's fantastic. So it's a good pick for you. Now we have a question from, I think it's Timaj Ost. I can't even say your name, Timaj Oz Australia. I'm not sure. Some of you people have some really strange names when you put them on your comments. So, but that's okay. It's we're all inclusive here. They say, hi Dale and Janine, if you would like to look into XRF and if possible to do an analysis. Small cap stock has been rising year on year and profitable company that pays dividends. So let's have a look at the stock that in question. So it's XRF is the stock ticker code, and you can see, look at that, it's just gone up. Phenomenal. It's up at over 60 cents or something. But look at this. If we look at the big history of the stock, it's really moved up from that sort of COVID low when it was down there at around 13 cents. Good buy. I don't know. It's really, really good buy at this. Well, it was a good buy down at these levels. It's not a good buy right at there. You can see how vertical it is. And this is really strange. If you look at the angle of this, it's been going 1, 2, 3, 4, 5 months, because it's one of those, I won't say it's a pump and dump stocks, but I can guarantee people have been finding this on chat forums and people talking it up. But eventually, there's going to run out of people buying it, and it's going to come right back down again. And that's what happens with these companies. And people quite often will not sell it, because you can see the normal sort of range or normal angle on this stock is really a whole lot different. And this is why a lot of people get caught, and it really is. You can see that's the angle that has travelled on in the past, and you can see it does that for short periods of time through those sorts of areas there. It's a little bit steeper through here, and look at the difference in the angle, the huge move up through there. I wouldn't be buying into this stock right now. I'd be a bit more concerned about how far it can go. Without me doing a lot of work, I'm not going to tell you how far it would go, but I would suggest it probably won't be. I wouldn't suggest it would go through 80 cents, but then hey, I could be wrong on that one, but it's not super liquid, this stock. It's got better liquidity, obviously, since it's taken off. As you can see here, look at the liquidity, since that March low. It's pretty high. It's down compared to what it was before. So, but eventually the liquidity will push it right down the other way as people start to take profits. You just need to have an exit strategy on how you're going to exit this stock and when you're going to exit if you do own it at this point in time. If you do own it, there's no reason to sell. So really there is no reason to sell. I would just have some exit rules on this, because when it falls, it's probably likely to fall pretty fast. But hey, you don't know, because at the moment it's dependent on whether the people buying it are seeing it a good long-term prospect, and eventually fundamentals change, and the company will catch up. If sometimes share prices will go, if this is the fundamental value of a company, prices will shoot way above what it should be, and eventually the company might catch up, which is great, but the price will just steady and slowly flatten out. But other times, if the fundamental value of the company is here and price is here, what happens, it comes right back below the fundamental value of the company. And that's really what you've got to watch out for a stock like this, because it is a smaller cap stock, as you mentioned. So just be careful if you do own it. Just make sure you have a trigger point or a line in the sand where you're wanting to exit that stock and say, if it goes below this level, I'm really happy to sell it and take my profits. All too often I find people get caught, and let's say this does tank, and go right back to what it was before March last year. I find a lot of people will hold all the way down, and the vast majority do, because they've seen so much profit they've made, and then it starts to erode and they keep thinking, oh, I've lost the money. And I want to give this distinction to people. While your money's in the market, you don't control it. All you control is when I buy and when I sell, that's it. So whatever money that you've made on a stock that's in the marketplace, or what you believe you've made on the market, you haven't made yet, because it's still the market's controlling the money. If you bought a stock at $1 and it's $2, that extra dollar, it's not yours, and you should treat it as not yours, because until it comes into your bank account, it's not yours, because the market can dictate whatever that price is at any one time. If the market deems tomorrow that it's worth $1 and it goes from $2 to $1, you've just evaporated $1, so it's not yours. So if you think about it that way, then you'll have less emotional attachment to it. So the dollar that you put in is yours, but again, the market's controlling that. And again, until it goes back in your bank account, it's not yours. So just be careful. If you've got stocks like this, and I would just put some line in the sand, as I said a minute ago, make sure you've got your exit strategy set. And once you've got that, then you know where you'll exit, and then take your exit. Simple as that. Thank you to everybody who did send in a question for this week. Now, unfortunately, as it has become normal, we just don't get a chance to answer all of the questions. So if you do have a question and you want to ensure that your question is answered, then all you need to do is publicly subscribe to our channel. It's publicly subscribe to our channel, and then type your question below, because I do everybody that's publicly subscribed to us, I actually do all of their questions, and everybody else, if I got more space, then I'll actually put those questions in. But as I said, we don't get time to answer everybody's question. Now, remember that here on this channel, we do these Monday market reports each and every week on a Monday, and we do our live stream every Tuesday night, 7 to 8 p.m. That's the show where you can ask Janine and I your questions, and give us a call. If you want to call in tomorrow night between 7 and 8 p.m, ring 92909988 and have your phone ready, and you'll be able to ask and chat to Janine and I live tomorrow night. So look forward to seeing you on that show. Well, that's it for me. You also need to hit the subscribe button, click the bell on the right of it, so you know when we upload our videos. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.